Welcome to the Transparent FX Academy. I'm Nick and I'm a top potter on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently approaching a quite strong historical structure level for this market. This zone was in fact acting already as support and demand here, again here, preceding all these rejections to the upside. We had one last test here, and the market again respected it as support, creating this green candle. And 2 months ago, we had another test of this previous support that is currently still acting as support. And as the market is currently approaching this area, we could expect another potential test of this zone before then getting rejected to the upside, as the market has already rejected it in the past all these times. So on the monthly, everything looks quite bullish. Dropping down on the weekly time frame, what do we see? Well, from a weekly perspective, we can see how in creating this move to the downside, the market is also creating a weekly M pattern. In fact, if we look closer, we can notice how the movement and pattern that the market has been creating in making this move to the downside has been the one of first an impulse, correction, continuation, and then the break to the downside, essentially creating this M pattern. And in general, after the creation of an M pattern, what we could expect is a potential rejection higher for the completion of the M pattern at the neckline, which is the previous support turned resistance here from a weekly perspective. So on the weekly, we could expect a bit more bearish price action, but then a rejection to the upside for the completion of this weekly M pattern at the neckline. We can also notice how essentially this is also previous structure from a weekly perspective. In fact, this area was acting as resistance here, then the market broke it to the upside. At that point, started acting as support here, and now it is once again acting as resistance. So this area should be acting as a magnet for the price, and essentially the market should be attracted to this zone, which at that point would also complete that weekly M pattern. Dropping down on the daily time frame, what do we have? Well, from a daily perspective, first of all, I did speak about EURUSD quite a few times in the past. I spoke about it after this impulse and correction. From here, I explained all the reasons for which we could expect this potential rejection to the upside. Again, we had this impulse and correction. From here, I explained why we could expect the creation of a potential higher high. And in the very last analysis, after this impulse, I explained why we could expect first a correction and then more bearish continuation. And by the way, I will link in description all these previous analysis, so you can go and check them out for more free education. Another important thing to keep in mind by looking here at the weekly time frame is that we have confluence of resistance at this area, because if we take our Fibonacci from the high to the low of this impulse, we can see how essentially we have the 50% and 0.618 Fibonacci retracements, both lining up exactly at this previous support or resistance, creating a confluence of resistance at this area, which once again the market should be attracted to go and test what kind of liquidity we have inside of the area. Before we continue further with our analysis from a technical perspective, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market, are doing. Now, checking the data here for the euro, what we can see is that with the last reports, net positions have been increasing. We went from having 143k net positions all the way up to 179k net positions, showing a strong increase of the net positioning, reaching 260k longs compared to only 80k shorts. Now, it is very important to keep in mind that if you're checking data for the euro, you're actually already checking Euro USD because all currencies on the spot are traded against the USD. So what we can take here from the data is that clearly institutions are increasing their net positions, increasing their longs and decreasing their shorts, therefore making the Euro USD stronger. So there is a possibility for that potential rejection to the upside and the completion of the weekly M pattern that we have previously identified by looking at the weekly time frame. So how we could be approaching this potential move higher and completion of the pattern. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the completion of that weekly M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment I'm running a special promotion in which you have a huge upfront discount on the lifetime access price of the mentorship program from $497 all the way down to one payment of $97. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program, you open an account there, you can get a full refund credited back into your trading account if essentially you use them as your broker. And if you scroll lower, you will see here that there is still time to join before the offer expires and everything goes back normal. And directly from here, this is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.